Welcome to our LVRC classes. Students, LVRC your success, and I'm sure because I see many of y'all doing it very sincerely, very regularly. But y'all understanding students with this same endeavor as what we did. Along with questions, I'll take you to provisions and we will try to revise, we will try to consolidate. C class covers TDS, TCS, advanced tax and returns. So all these things we will cover up in today's class. I've already shared the this particular question bank, but today I did something interesting. Besides sharing, if you will see the original question bank which is already uploaded, it is having 13 questions. But then I decided let me add a few more questions, something which are according to me now very crucial considering your immediate past exams and considering some latest developments. So I've added some additional questions. Definitely I'll upload these also. But to start with, since these are not there, again I'll request you all to just take a screenshot. So you may take a screenshot of these first three questions and then we will discuss them. We will go back to the provisions so that the provisions, which I'm sure would be slightly tricky because they are numerous. Hence, it will require one more revisiting to these provisions. So let us do that. So first take a screenshot, students. I'm sure you all have done that. And yes, a very, very good evening to all of you all, Gayatri, Harshal, Vishakha, Garva, Dhanlakshmi, and also feeling proud to be part of such an old institution, which is equally old as our independent country. So we are celebrating the 78th CA Day today. And I really feel privileged. I really feel special to be part of such a prestigious institution, having such a big, what do you say? I cannot call them as alumni because they are all still chartered accountants working and part of the institution. So such a big group of highest learned professionals who are running the country, who are running the economy, and who are playing a very big role in the growth, in the sustainability of the various organizations in tough times like demonetizations, like COVID, like all these global uncertainties and war. We are the ones who are holding our organizations, our clients intact and ensuring that they sail through so that whenever the good time comes, they enjoy the good times because we have stood as their shield in these tough times. So I'm sure you would like to become that shield for your future clients. And what we are doing today is the shield building process, that is learning and training and expertising ourselves in the core subjects so that tomorrow we can play the role of the shield for our clients, and in the favorable times we can play the role of the wheel which drives their business faster, smoother on a progressive lane. So students, with this, let us start our today's session. Yes, Aditya, Garva, very happy CA day to everyone. So let us start. So again, I have mixed the questions, TDS, TCS, advanced tax, returns. So as it will happen in the exam also, you have to identify the question firstly to which chapter it belongs, then to what is the relevant section or sections, and then finally recalling those sections and then applying and deriving the answer. So let me start. So I'm starting with the additional questions. Examine the applicability and determine the amount of TDS TCS as per the provisions of the Act for the current financial year and AY 26-27. ABC has sold a flat to Mr. Jatin for 47. So 47 is the basic price of the flat. But as you all know that in real estate, you are required to pay on multiple add-on amounts. So The agreement to sell provide that in addition to this 47 lakhs, Jatin also has to pay maintenance of 10,000 per month, and the builder has taken 24 months maintenance amount in advance. Further 3 lakhs for car parking. So nowadays that is also done. You have to say pay separately for the car parking. Then rupees 1 lakh for the club membership. And finally, the total consideration arrives with this, or I'll say the total payment arrives with this. Then comes the stamp duty value, which is 48 lakhs. Now, we all know that this is the question from the TDS chapter, but it is important to recall the provision because there are some nitty-gritties. As you can see, multiple types of payments are given. The first question is whether all are included or only few are included. Then again, they have given you the stamp duty value. So again, the question comes whether I have to compare it with stamp value. If you recall, in our previous chapters, we had taken 110%. So whether that has to be done. So these are the issues which have been thrown on to us with this particular question. Now we come to the relevant provision. So it is very important that you identify the correct provision so that you are in a position to reach to the answer. So the relevant provision for us is 194 IA. Very good. Correctly pointed out by Garva and Gayatri. Garva, have pointed out one more section. Do you feel that section is also applicable? Can you please check that again? We'll be going to that section, but not for this question. But still, if you feel there is one more section applicable, please check and let me know that whether that also has to be tested for this question. So what does 194 IA says? So IA says it applies to payment on transfer of certain immovable property, but it should not be agricultural land. So our case very well falls in this. Now comes the main point. What is the threshold? So in TDS, we all know that TDS will apply only when the value will cross a particular threshold. Now here what it says, the threshold is, mind this sign, it should be greater than or equal to rupees 50 lakhs. Now what should be greater than or equal to 50 lakhs? It may be the consideration or the stamp duty value. So even if any one of the values is exceeding, that is sufficient. Then who is the deductor? Any person being a transferee other than a person referred to in section 194 LA responsible for paying compensation. So where it is a case of compulsory acquisition, the government is the transferee, and for that you have a separate TDS section under LA. So that will not be covered. That has been clarified. Anyways, our case is not of compulsory acquisition. The person who is whose TDS has to be deducted should be the resident transferor. So that is also satisfied. And the rate is, now this is important, 1% of consideration for the transfer or stamp duty value, whichever is higher. Now in all this, the question comes that one thing is clear, we have to take whichever is higher. Plus here that 110% business is not there because normally in PGBP, in capital gain, in other sources, in gift, wherever there is immovable property and wherever there is stamp value, we always check that 110%, but that is not the case here. Here it is straightforward consideration compared with the stamp duty value. The bare stamp duty value, no 110% business. But the question is, now here, what all will be included in the consideration? Because here in the question, the builder has charged and collected from you multiple amounts. So before comparison, we'll have to first decide what will be consideration, because the bare value of flat is only 47. So whether we should compare 47 with 48, or we should add up all these, or whether we should add up some of these and some things, certain things should not be added. So what is your understanding on this, students? What all have to be added, included in consideration before we compare it with stamp value? Students, I'm awaiting your answer. Harshal, so you have written one word. So whether it is included, not included. Garva, you are right. So stamp duty value compared with what? That is my question. So you have 47 lakhs, the basic value of property, and then you have multiple charges which are charged in addition to that by the builder. Okay, Simran has given one specific answer. Harshal, again, you are only writing a word. Whether it is to be included or not included, I'm not getting it. Okay, Dhanlakshmi has given an answer. Garva, again, how can toll booth means I'm not getting how you are including 206C here. Good. Yes, Vishakha, correct. So, students, the answer is that whatever the builder has charged to you. Now, here a question may come, as has also been raised by Simran. Sir, what about this maintenance charges which are taken in advance? See, when you read the language of the law, it says whatever consideration the builder has charged to you. So it will include all charges, including even this advance maintenance, Simran Beda. So answering this, whatever the builder charges, you will add up everything, correct? And on addition of all this, whatever is the total value, that has to be compared with the stamp duty value. So let us check how much it comes. So 10,000 into 24 months. So it will come to 2,40,000 plus 3 lakhs plus 1 lakh. So this becomes 6 lakhs 40,000, 6 lakhs 40,000 plus the original price 47. So it becomes 3 lakhs 40,000. So the total consideration which you are paying to the builder is 53 lakhs 40,000. This 5340 you will compare with 48 lakhs, whichever is higher is obviously 5340. So your final answer will be that TDS will be applicable on this total which comes to 5340. So this plus this into 24 months which comes to 2.4 lakhs plus this. So total of all this comes to 53.4 lakhs, which is greater than this. So you'll take this value and multiplying it by 1%. This will be your TDS amount. Correct, students? Is this clear to everyone? Now, again, an important point is you have a threshold of 50 lakhs. Many times a confusion comes. Should we deduct 50 lakhs and on balance we should take TDS? Answer is no. That is only in one TDS situation where whatever threshold is given, you will compute TDS beyond that. Yes, correct, Garva. Otherwise, in all other cases, once you cross the threshold, you have to deduct TDS on the total amount, including the threshold figure, not excluding the threshold figure. So yes, the answer given to me by Vishakha Simran is 53,400. This is fine, students. Clear, everyone? Let us proceed. So the second part. State government of Jharkhand grants a lease of coal mine to XYZ Limited on this date. It has charged 7 crores for the lease. Now see, this is one transaction, that is of granting lease. Then comes the second transaction where XYZ, utilizing the lease, has extracted coal, and after extraction of coal, it has sold this coal worth rupees 2 crore to another company, which is a public sector company during the year 25-26. Turnover of both these companies are given for the previous financial year. So of XYZ it is 5.5 and of PSU is 11. Now we have to determine what is applicable, TDS, TCS or nothing. Correct, Dhanlakshmi, you're right, beta. So whichever is higher, you'll compare it with threshold. If it exceeds the threshold, then that amount multiplied by 1%. You're right. Okay, Garva, Gayatri. Okay, Simran, good. So I'm happy to see many of you all giving me good answers, correct answers. So here, students, it comes or it is part of TCS. Now in TCS, firstly, the TCS is on sale of certain specific goods, which includes liquor for human consumption, tendu leaves, timber, again timber, so all types of timbers and other forest produce other than timber and tendu leaves, scrap, minerals. Now here this is one mineral being coal or lignite or iron ore. So here this is one TDS which may be required, which is for the second part where you are selling coal. Correct? Before that, we have to check for that. Yes, lease or license. Now here, I believe our TCS, if applicable, should fall here. Why? Because here the government has given you the license of coal extraction. So it is, if I connect it with a movie, it is the KGF movie case. Though over there, what they were extracting is not coal, but they had taken the license of limestone and coal quarry. Though what they were extracting, we all know, we have seen the movie. Now, every person who grants a license or enters into a contract or otherwise transferring any rights or interest in parking lot, that is not our case, toll plaza, no, a mine or a quarry. So this is what is the case. To another person other than a public sector company for the use of parking lot, etc., etc., for the purpose of business. So we are very much falling in this. So in this particular case, there will be TCS on the first part of the transaction. What is the first part of the transaction? Where state government has given us the license to do mining of coal. On that, there is TCS at the rate of 2%, right? So going back to our question, so on this 7 crore, there will be TCS. Rupees 7 crore. So when I'm paying to the government, this 7 crore, I have to pay 7 crore plus 2% of 7 crore, which I think will come to 14 lakhs. Correct? So this will be the amount of TCS which the government will be collecting from me and then depositing it with the government. Correct? First part clear, students? Garva, I'm still not getting. In question one, also you are mentioning 206C1C. Now let me take your question. But in question one, where there is parking lot or any such thing in question one, tell me. Where there is license given for parking lot, beta? Garva, because here also in this question you are mentioning 206C1C. Where there is a license given for parking lot. Garva, you had raised this question, but I said I'll address this question when I go to the next question where 206C1C will be covered. So now here again you have mentioned that in the previous question, that is question one, there should be 206C1C. I believe you are talking about this. But better, there is a difference. Here the builder has sold you the parking and 206C1C is where, now I'll give you the real life example of 206C1C. So you have seen that whenever you go to marketplaces, there are some designated places called as pay and park. And you are compulsorily required to park your vehicles there because on roadside the parkings are not allowed. So in many commercial areas, you will find this pay and park. Now this pay and park, whoever is running is a private person. But How are they getting the rights to do that? Because the local government gives them the license to run that pay and park for a year, for 5 years, whatever is the period of license. So that is what will come in 2061C. They have not sold the parking space. Sale of parking space will come in immobile property sale, which is the TDS section 194 IA. And in TCS, what we are covering is the license. One second. What is covered here is the license for parking lot. I hope you are able to distinguish between the two. So here we are not covering the sale of parking space. It is not sale. It is only giving you the space to be used as pay and park. Garv, I hope this is clear to you. So in first case, there will never be 206C1C for the parking 3 lakhs. Am I clear? Okay. Coming back. Sorry. Yeah. Now, so first transaction, there is TCS. Now there is another transaction given where there is sale of coal. Now when there is sale of coal, again interestingly, we have TCS, which we already saw here. Now here what is happening? There is sale. So this part is covering sale. And in these specified goods, one of the goods is coal or lignite, etc. So here coal is covered. Now who is selling coal to whom? So the company who has taken the license, which in our case is XYZ, is selling the coal to another company, LMN. Now, interestingly, the buyer company is a public sector company. Now, importantly, when you read this TCS provision, you will find that there is a carve out. So see here, I think this is short, so we are not getting it. One second. If I take you to the detail of this section 206C1C, over there are some exceptions in whose respect TCS will not apply. Yeah, this is one. Yeah. Now see non-applicability. See, where is the exception given? I'm missing out the page, students. Can anybody help me with the page? Because the public sector companies, they are excluded. Yes, here. I think so. Yes. See, now the definition of buyer for the purpose of 206C1, which is our case. So a person who obtains in any sale by way of auction, tender, or any other mode goods of the nature specified in table in point 1, that is all our cases, tendu leaves, etc. Or the right to receive any such goods, but does not includes. So who will not be covered in the buyer? So the very first exception is a public sector company. So in our case, the buyer MN Limited is a public sector company and public sector is excluded from the definition of buyer. In other words, when you are selling any of the items listed out in 206C1, which in our case covers coal, to any one of these persons who are excluded, so automatically TCS will not apply. So this is first part of the transaction. Now coming to the second part, sale of coal, sale of coal by XYZ to LM is not leviable to TCS because PSU is excluded from definition of buyer under section 206C1. So the section in which we want to cover this TCS, that section has specific exclusion where PSUs are excluded. Hence, no TCS on sale of coal by XYZ to LMN, right? But interestingly, students, and this is the beauty of this TDS TCS, that in TDS, we have another TDS which is on transactions of purchase sale of goods. This one, 194Q. Now we will have to test that the seller cannot collect TCS because the buyer is not the eligible buyer. Can the buyer deduct TDS on this transaction? Now, interestingly, what is covered in 194Q? The transaction should be of purchase of goods. So what is being purchased is coal. Is it goods? Yes. The value should exceed 50 lakhs. What is the value? The value of our transaction is 2 crores. So this is also satisfied. Most important, who should be the buyer? So buyer who is responsible for paying any sum to any resident for purchase of goods. Buyer means a person whose total sales, gross receipts or turnover from business exceeds 10 crore in the immediately preceding financial year. Now, who is the buyer in this transaction? It is LM. Now the turnovers of last financial year are given. For XYZ it is 5.5, but for LM it is 11. And we are talking about the buyer who is LM. So buyer's turnover exceeds 10 crore. So even this condition is satisfied. Who should be the seller? Any person. If all these conditions are satisfied, TDS at the rate of 0.1% will be applicable, and that will be our final answer. So in this same transaction, there will be TDS. (194Q) of 2 crore into 0.1%. So 1% will be 2 lakhs. So 0.1%, students, I think is 20,000. Correct? Is this correct, students? Students, I'm asking something. Or why am I asking? Or here the threshold you have to deduct, and on excess you have to calculate the TDS. Read this. 0.1% of the sum exceeding 50 lakhs. So as I said earlier, generally the threshold has to be included in the amount of TDS calculation. However, there are exceptions to this, and this is one such exception. So it will not be on 2 crores. It will be amount exceeding 50 lakhs. So 2 crores minus 0.5 crore, that is 50 lakhs. So on 1.5 crore at the rate of 0.1%. So 1% is 15. No, not 15, 1.5 crore. So 1% is 15, 1.5 lakh. It will be 15,000. Right, students? Clear, students? See, these are the minute pointers that you have to keep in mind. So that is why I took these additional questions just to cover up these special points. And I believe these are the ones which are very, very important for your upcoming exams. So kindly do prepare them thoroughly. Correct, students? Is the first question done? May I proceed with the next one? Fine. So examine, compute the liability for TDS, TCS, if any, in following cases. State Bank of India pays 70,000 per month and 60,000 per month as rent to central government and Mr. Kunal respectively for building in which its branches are situated. So SBI has branches in multiple parts of your city. In one place, it has taken on rent central government's building. In another place, it has taken on rent an individual's building. Now, the TDS which is applicable is TDS on renting, for which the section there are two sections. One is 194I and the other one is 194M. Correct? Sorry, not M, 194I and IA. Now we have to check what is applicable over here. So when 194I is applicable, yes, IB, correct. Sorry, multiple section numbers. So either it is I or IB. Now when I is applicable, where the person who is making the payment, that is the payer, is any person other than individual HF. And when IB is applicable, where the person who is payer is individual HF. Now be clear, students, because in our case study, one person is individual. But we have to understand when IB is applicable and when I is applicable. I is applicable where the person who is paying rent should be other than individual who is not covered in tax audit. Point is, in our case study, Mr. Kunal, who is an individual, is the receiver, not the payer of rent. I hope this is clear to y'all. So Mr. Kunal is not the payer of rent, receiver of rent. And this condition is applying to the payer. In our case, the payer is State Bank, which is neither individual nor HF. So we very well fall under 194I only. Who should be the receiver? It can be any resident. So in one case, it is government. In one case, it is Mr. Kunal. Now for plant machinery equipment given on rent, rate is 2%. For land building, it is 10%. Now, importantly, the threshold is rupees 2,40,000 for the year. Importantly, students, if you remember, there is an exception to all TDS. What is the exception? That whenever you are making payment to government, you will not deduct TDS of government. So here, when SBI is making payment, SBI is making payment to two persons. 70,000 it is paying to government, 60,000 it is paying to Kunal. So as far as payment to government is concerned, the general rule for all TDS is, so whenever anybody is making payment to government, obviously, logically, you will not deduct TDS of government. Then comes rent given to Mr. Kunal. Now for this, we will test section 194I conditions. Payer is SBI, valid. Recipient is Kunal, who is a resident, valid. And the amount annually should exceed 240. Now monthly is 60. So 12 6 are 72. So annually it is exceeding. So all parameters are satisfied. And here what is given on rent is building. So the TDS rate is 10%. Now again, same question students, TDS on what amount? Whether the threshold has to be reduced or TDS will be on the total amount, 7.2 lakhs or after reducing the threshold. So again here, the answer is it is on entire 7.2 lakhs. So your TDS is rupees 72,000, which SBI shall deduct while making payment of rent to Mr. Kunal. Is this clear? Clear, students? Yes, you're right, Garva. So in case of 194I, TDS will be deducted on the date of payment or credit, whichever is earlier. In case of 194IB, whenever that matter comes, the TDS is to be deducted annually. You are correct, Garva. Correct. Clear, students? Should we proceed? Next. Payment is made of rupees 2.5 lakhs to Mr. Deepak, who is a transporter, who owns 8 goods carriages, so around 8 trucks. Gayatri, beta, what you are saying 50,000 is in IB. Section applicable to us is I. So in I, the limit is 240 only. There is no change, no amendment. See. So in I, it is 240 and it is IB, it is 50,000 per month. So IB, the requirement is monthly. In I, it is annual. So Gayatri, our case is falling in I. We already discussed that. So you will see the limit of 240 per year. Correct? Is that clear, Gayatri? इसीलिए बोल रहा हूँ. Fine, Gayatri. Harshal is also saying it is 50,000 in my study mat. Harshal, beta, which section you are seeing? I don't think in any study mat in 194I it is 50,000. Gayatri, you please confirm because you also mentioned 50,000. Is 194I giving the limit of 50,000? One second. One second. You are saying in updated study mat. As per me, the study mat which I am using is also updated. But still, if we have a doubt, let me go to the BOS portal. Let me download the very latest one. Okay. Yes, updated study mat. You are correct, students. Correct. 1 second. I'll open the updated one then, so there is no confusion. Yes. Yes, students, I'm now taking the updated one so that there is no difference of understanding between you and me. Okay, done. Fine. Yes. So let us continue. Okay. So should we proceed, students? Yeah, correct, Simran. Chalo. So an entire amount, the applicability will be 10% and not only on the difference. 1 second. 194 HIJ. Yeah, I. Fine. Okay. Chalo. Let us proceed. Now, coming to the second case, payment of 250 to Mr. Deepak, who is a transporter who owns 8 goods carriages throughout the PY. Importantly, he has not furnished the PAN. Now, firstly, which is the section applicable to goods carriage or transporter, students? Which is the section applicable? Okay, good, Garva, good, Gabbar. Yes, others? Because until unless you identify the correct section, you cannot test the conditions. No, Aditya, 194Q is for sale of goods. Here it is transportation. So as correctly pointed out by Garva and Gabbar, it is 194C. Now in 194C, whenever you make payment to contractors, which also covers transporters, because when you enter into a transport, it is a contract for transport of goods, so it gets covered over here. Now in this particular case, what are the conditions for leviability of this particular TDS? So in this particular case, TDS will apply if the conditions given here are satisfied. Now in this case, whenever you are doing transportation of goods, there is one exclusion, that is this TDS entirely will not apply. Whenever you are doing transportation of goods, But for that, we'll have to go to the detailed TDS part. So let me take you to the detailed part of TDS. So there is an exception that in relation to the TDS of 194C, when it is done for goods transport, if some conditions are satisfied, TDS will not apply. Yes. Now see, what are the pointers? No deduction is required to be made from the sum credited, paid, likely to be credited, paid during the previous year to the account of a contractor during the course of business of plying, hiring, leasing goods carriages if he furnishes PAN. So what are the key conditions? Key conditions is that whenever there is a transport contract, you will not be required to deduct the TDS if one of the conditions is that he should have furnished a declaration along with his PAN. Now, what declaration he has to furnish? One, the person is engaged in transport business, and two, the person owns 10 or less goods carriages. Now, students, just try to connect this with the other sections. I always rather stress on this point that whenever you are studying taxation law, specifically income tax, GST, you have to try to connect it with the other chapters also wherever applicable. Now here, for TDS, only one chapter is applicable, but what I want you to connect to this is there any such similar condition of 10 goods carriages anywhere else in the Act? Because when you have any such similar point anywhere else, it is very important that you try to go and check that point also. Like in my very first question on sale of immobile property, I talked about that 110% condition. So wherever we have discussed sale of immobile property in PGBP, in capital gain, and then in gift and other sources, we have always compared the consideration with 110%, stamp duty value with 110% of consideration. But for TDS, that was not applicable. So I purposefully connected that because you have two dissimilar provisions. So you should not get confused that, okay, why it is 10% there, why not here? So you have to be clear. Similarly, if you try to recall, you will find that there is somewhere in the Act something relating to 10 or less goods carriages. Try to recall that because connecting parallelly will help. So yes, very correct. Harshal, Garva, section number is wrong. Vishaka, there is no exemption under 54EF because 54EF is for capital gain. Dhanlakshmi, Kushi, perfect. It is 44AE, presumptive income section. So under 44AE of PGBP head, similar condition exists that whenever a transporter who is not owning more than 10 trucks is engaged in the business of flying, hiring, or leasing of goods carriage, that is transport business, that transporter is given an option to compute income on presumptive basis. Now link this TDS with that point. For the same transporter, the law says no TDS is applicable. So the transporter is same who is owning not more than 10 goods carriages in a year. For that transporter, PGBP section has given the option of computing income under presumptive basis, and TDS section has given this transporter complete exemption from TDS, but subject to the condition that the transporter makes a declaration and also submits PAN. Correct? Now, in our case, what has happened? The transporter has satisfied the condition of not owning more than 10 trucks because the transporter is owning only 8 trucks. However, the transporter has not furnished his PAN, because of which the exemption given under 194C from TDS has gone. So TDS firstly is applicable. Now, I'm sure students, you all also recall this point of TDS where section 206AA applies where no PAN is given by the payer. Sorry, pay, that is whose TDS has to be deducted, where the pay does not give PAN, then the law says TDS will be deducted at the rate given in that respective section, or 20%, whichever is higher. Now, in our case, interestingly, if this person would have given PAN, the TDS itself would not have applied to this person. Means no TDS would be deductible of this person had this person given the PAN. But since the person has not given the PAN, TDS is applicable, plus TDS is applicable at a higher rate. So in this particular case, TDS would be deducted at the original rate or 20%, whichever is higher. So 2.5 into 2 is 5. So it is 50,000. So TDS is under section 194C, but because of non-submission of PAN, the rate is the higher rate as per 206AA. Is this clear, students? Understood by all? Anybody, any queries, doubts? Good. Others, it is clear? Fine. Should we proceed, students? Next question. Again, you have to assess the TDS TCS applicability. Mr. Harish has bought an overseas tour package for Switzerland for himself and family of 10 lakhs from an agent who is engaged in organizing foreign tours. So wherever a person is going on foreign tour, there is a specific TCS, not TDS. Now, TCS applies in such cases on the foreign tour package amount. Yes, Harshal, you are right. So, Garva has given me a section number. Anybody else can give me the section number of this? TCS section number for foreign tour packages. Students, I know TDS TCS is very vast. It is very painful. But I will request at least the questions which we are discussing today, at least for these questions, whatever are the applicable TDS TCS provisions, please do them thoroughly. Because these are the most important ones, most critical ones. Aditya, this is TDS section which you have given. Now we want TCS. One thing is for sure, TCS, all sections will be 206C and then something in bracket. Yes. So yes, Garva correct, Gayatri correct, Vishakha correct. Varna, I think you want to write it correct, but there is a typo error. Yes, Simran correct. So it is, students, 206C1G. So 1G is the section number for TCS. So 206 is standard. In that, for foreign tour package, it is 1G. Right? Now, let us go to that 1G to revise the provisions. Yes. Now, what is the provisions? So remittances, remittances in case of foreign tour packages, what it says, Section 206C1G provides for collection of tax by every person who should be the collector. He should be an authorized dealer who receives amount under the liberalized remittance scheme, which is LRS of the RBI for remittance from a buyer, or being a seller of an overseas tour program package. So first condition is met in our question. The provider is an overseas tour program package seller. So first condition is satisfied. Now, tax has to be collected at the time of debiting the amount payable or the time of receipt, whichever is earlier, fine, that is okay. Now, what is the rate? Now, the rate is, first you have to see what is the exception, because you should always, students, remember the exception first. So, where the amount is remitted outside India for the purpose of pursuing education and the amount remitted is out of a loan obtained from financial institution, or it is for the purpose of education or medical treatment, then the rate which is given is nil, and 5% of the aggregate or aggregates amount in excess of 10 lakhs and 20% of the amount or aggregate of amount in excess of 10 lakhs. So for education and medical, it is 5% of the aggregate amount exceeding 10 lakhs. Where the amount is remitted for the purpose other than education and medical treatment, 20% of the amount in excess of 10 lakhs. And where it is for the purpose of education given out of loan, it is nil. Now, where the amount is for a purchase of tour package. So here the remittance is specifically for tour package. Then the TCS is applicable at the rate of 5% for the first 10 lakhs and 20% for the amount beyond 10 lakhs. Correct? So our case is not falling in the second part. Our case is falling in the first part, because what this Mr. Harish has taken is a overseas tour package. So since it is a tour package, we apply the first condition. So what will be our answer? What rate? 5%. So it will come to, I think, yes, 50,000 rupees. 50,000, Lakshmi. I also first calculated 5, then I realized it is not 5, it will be 50 because it is 10 lakhs. Right? Any doubt, students? Now comes the next question. Now in the next question, we will have a special section applicability. Now what I mean to say is, see, we already saw 194C, where you are making payment to contractors. But when 194C is applicable, where the payer of the amount is central government, state government, local authority, company, firm, trust, society, etc. And in case of individual HUF, now this is the most important exclusion, students. In most of these sections, you will find that if the payer is individual HUF, it is not required to deduct TDS. However, individual HUF will be required to deduct TDS where the turnover of that individual HUF has exceeded the limit of 1 crore in case of business and 50 lakhs in case of profession in the preceding financial year. Now, see, I always say that you should try to understand the law logically. Logic of how and why that provision is created. Why? Because, see, especially in provisions like TDS, where there are so many provisions and there are so many exceptions. This is a common exception I'm sure you would have observed in most of the sections. Not all, but most of the sections. Payer, if it is individual HF, this exception is commonly there. Which means what? That if as an individual you are making payment, let us say here of contract charges, then you will not directly fall in TDS provisions except where your turnover of previous year has exceeded 1 crore for business. Now, what is the logic of this? If you'll observe these payments, most of these payments are common day-to-day payments. Now, you and me as individuals are also involved in making these payments like interest on loan, like this contract. So let us take a very simple example. You have carried out a small repair work in your house, and in today's scenario, exceeding this 30,000 threshold is not a big thing. You do a small tile repair work or your bathroom repair work, that will definitely exceed 30,000 today. Now, in such cases, are we as individuals required to deduct TDS? This is where the logic of this particular exception comes. So, how the law has been drafted for TDS is that for other entities like company, partnership, this condition or this exception is not there. Why? Because these entities are specifically formed for doing some commercial activity. But as individuals or as families, which is HUF, you and me may be making these payments, but not necessarily for the purpose of business. Point number one. Many times these payments may be personal. Two, even where you and me are doing business. So let us say I'm running an office as a chartered accountant. I have my office. Same point. There is some leakage in the bathroom. I get it repaired. The bill is 40,000. Now I very well fall in 194C. But am I required to deduct TDS? Again, what they want is even where individual HF are engaged in business, but again connect this with PGBP. In PGBP, if you recall, this is the same limit given for presumptive taxation. Correct? What is the logic? The logic is over there also, if you recall, if your individual HUF engaged in business or engaged in notified profession, these are the limits. If your turnover is below the limit, you need not maintain books and calculate your income at a presumptive rate. Now try to connect both these points. Same individual HUF here is not required to deduct TDS. Why? Because when I'm not making you maintain books, how can tomorrow, as a tax officer, I can check whether you have correctly deducted TDS or not? Because for checking that, you should have maintained books and recorded each and every payment in detail. What is the nature of payment? What is the amount paid? Only then I can check whether the nature of payment is one of these and the amount has exceeded the threshold. So the logic is, see, understand the logic. Same logic of PGBP is continuing in TDS, that the same individual HUF where either not doing business, no TDS, or doing business, but the business is small and there is no requirement to maintain detailed books and presumptive income is allowed, they are given the relief in TDS. That is why you will find in majority of TDS, the payer will not include individual HF. Correct? Now, these sections were made which covered 194C, then one very common section 194H, that is commission and brokerage, because many times we have to pay commission and brokerage, then rent 194I, then 194J, professional fees. We are paying all these things regularly. Now, after these regular sections were there, and these were there for a long period of time, suddenly the government realized that, wait, we are missing out on something. What are we missing out on? That as an individual HF, where you are not doing business, any above section will not be applicable to you. Why? Because for applicability of the above sections, you should be doing business, that also having turnover above 1 crore or 50 lakhs. Now I realize, the government realize that there are individual HFs who may not be doing business, but they are HNIs. What are HNIs? High net worth individuals, whereby either because of their salary income or because of their property income or because of their other sources income, they are HNIs, they are having huge amount. And because of that, because of that, you are also making a big amount of payment for what? Contract, for commission, fees for professional services, and that IB, which we were discussing in the previous section, IB, where you are also paying a huge amount of rent. Now, when you are making a huge amount of payments for all these common expenses, the above provisions, the regular provisions of TDS were not covering you. And because of which the purpose of TDS was defeated, where the government want to keep a track of all the big payments. See, TDS, remember students, one purpose of TDS, what we understand, is for collection of tax. That is correct. But that is not the only purpose of TDS. The purpose of TDS is also to keep a track of all the big payments to ensure that they are properly accounted for, and whatever is the tax, the person who is earning that amount is paying in future correct tax. So because of TDS, all these persons come under the tax net because their TDS is deducted, their details are reported to the government. So the government knows that, okay, this person has taken a big payment, and then government can go and check their returns to ensure that they are correctly calculating and paying the tax. Now, coming back to the point, when the government realized this, that okay, we are missing out on big payments, so they brought in 194M. Now, if you see 194M again covers payment to contractor, again commission brokerage, again professional fees. Now, for all these three, you already have a specific section 194C, 194H, 194J. Then what was the need to cover it here? Because here we wanted to cover those individual HUF other than the one who are covered above. And who are not covered above are the ones either with small businesses or with no businesses. But see the amount, how much they have paid in a year? More than 50 lakhs, which is a huge amount. So they wanted to cover these huge payments made by such individuals under TaxNet. So they crafted a special TDS provision. Similarly, this parallel provision of for rent payments, 194 IB. So we saw 194I in the previous question. Parallel to that, you have 194 IB. Again, what is the point? The payer is who? Individual HF, but not the individual HF who is already covered in 194I. Because 194I, we have covered individuals who are having business turnover exceeding 1 crore or profession turnover exceeding 50 lakhs. Here we wanted to cover remaining individuals. Why? Because see the amount of rent they are paying per month. Please understand, rent of 50,000 per month definitely means you are staying in a lavish property. So the point is, the government created these special provisions to cover already what is covered above. But why? Because that was missing out on payments made by individual HF who did not have businesses, but maybe high net worth individuals, HNIs, and what they are spending is a huge amount. So now they are also required to make the TDS. This is what is the logic of all these provisions. Correct? Now coming to our present question. So what Mr. Aditya pays is rupees 55 lakhs during the year to Mr. Naresh for supply of labor for carrying out construction work. Now, this should be covered in 194C. If you think for a while, it should be covered in 194C, but it will not get covered. Why? Because Aditya's turnover of the last year is below 1 CR. So 194C applicability is gone. But Aditya has spent rupees 55 lakhs. Now the government wants to keep a track of this. So they brought in this parallel new provision, which is 194M. And even though Aditya is not getting covered in 194C, but because of this specific provision, Aditya will get covered in 194M. So students, many times I say, specifically for taxation law, try to understand the logic of these provisions, because many times the bare provision may seem difficult to understand. You will get confused, ki, okay, why here there is exception. But when you understand the logic of these exceptions and wherever possible, connect it to other provisions of the Act, it will be clear. Right? Now, 194M applicability will test who is the payer individual HF other than the one who is covered in 194CHJ. We are not covered there. Why? Because our business turnover is below 1 crore. So we are not falling there. So automatically we fall here. 194M. And what are the payments covered? Contractor, commission, professional fees. We are definitely in the first one itself. Now we have to check the applicability, whether threshold is crossed. It should be 50 lakhs, exceeding 50 lakhs in a year. And if that is crossed, then 2%. Yes, very well, we cross that in this question. So TDS is applicable under section 194M. Again, it is on the total amount. 50 lakhs will not be deducted. Correct? And the rate is 2%. Students, I hope you have understood. Aditya beta, again 194Q covers what beta? 194Q specifically exclusively covers sale of goods. Now, when you are providing labor, is it sale of goods or is it a service that you have provided, Aditya? Definitely, you know the answer. It is service. So 194Q can never be applicable, Aditya. Correct? I hope you understood this. Yes. Great. Perfect. Super. Right, students? Clear? Everybody? Okay. आगे बढ़े. Now, in the following cases, the total income of the assessee or the total income of other person in respect of which he is assessable. Now, see, students, don't get confused. What does this means? This simply means clubbing. So, the total income of yourself and the total income of other persons in respect of which you are assessable, which simply means clubbing. So, total of both these income is not exceeding your basic exemption limit. Now you have to state with reasons whether the assessee is still required to file the returns. So now in this question, we will be trying to answer the question on filing of returns. Now for return filing, students, 139.1 has made firm, a company, always obligatory to file returns. But when it comes to individual HF, what is the requirement? Individual HF are required to file returns only when their income exceeds the basic exemption limit, right? Now comes the interesting point. Now here already in the main text of the question, they have said that their total income, including the clubbed income, is not exceeding the basic exemption limit. Now, are they still required to file return? Now here comes the exceptions given in 139.1. So if you recall the exception, students, 139.1, the basic rule is individual HF is required to file returns only if their income exceeds basic exemption limit, but there are exceptions. Now, what are the exceptions? Let me take you to them so that that will get revised. So firstly, see, what is the first provision? Company or a firm always required to file return. So it is mandatory. Here, it has nothing to do with your total income. Then comes the person who is resident, but other that not ordinary resident. So simply for ROR, and when they are holding some assets outside India. So where ROR is holding asset or beneficial interest outside India, again they are required to file returns. And then come the our main question. Further, every person being individual HF, AOP, BOI, whether incorporated or not, whose total income or total income of any other person in respect of which he is assessable during the previous year without giving effect to provisions of deductions, which is chapter 6A, or without claiming the exemptions under capital gain, which is 54B, D, ECF, exceeds the basic exemption limit, is required to file the returns. Correct? So, you are required to file the return only if your income exceeds basic exemption limit, but which income? Before giving effect to this. Right? Now, in the light of this, you analyze this. Manish and Sons, who is HF, has sold residential house on which there is a capital gain, which it has invested in the 54 EC bonds. After this, there is no taxable capital gain. Why? Because up to 50 lakhs, if you remember, 54 EC gives exemption, and your capital gain was only 12 lakhs, and you have invested it, complied with the conditions, so your entire capital gain is exempt. Now the question is, and plus your income is not exceeding your basic exemption limit. Now the question is, are you still required to file the return? Yes, students, we just saw the provision. Are you still required to file the return? No, Gayatri, you are on the second question. You are giving me answer of second question. I am still on the first one. So what is the first income? First income is this. This is the second case. Don't answer this. We'll come to that separately. So the answer is, what did the provision say? The provision said that your total income before claiming this exemption, if it exceeds the basic exemption limit, you are not required to file the returns. Now, if I exclude this exemption, it means what will be your total income? It will be 12 lakhs. And for HUF, the basic exemption limit is 3 lakhs. So since your income will be exceeding the basic exemption limit, you will have to file the return. See, students, you will have to write it like this, how I just explained. First, you'll write 139.1, where you'll say that they are not required to file return if their income is below basic exemption limit. And then you'll say, however, there are exceptions. And in exceptions, this is the main point, that the income that has to be checked is before claiming Chapter 6A deduction and before claiming the exemption. Correct? Now comes the second question in this. Samarth has incurred an expenditure of 1,20,000 towards consumption of electricity. So the electricity bill of Samarth is 1,20,000. The payment is made through banking channel. Now the question is Samarth required to file returns? Now here there is no question of income also. Here Samarth is only having some expenses in the form of electricity bill. Again, see students, there are furthermore exceptions to this general rule where they have to file returns compulsorily. What is this? Any person other than a company or a firm, because anyways for them return filing is compulsory in all cases, who is not required to file a return in 139.1, that is as per all the above provision, is still required to file the return in the prescribed form manner on or before the due date if during the previous year such person has done one of these things. What? Deposited an amount or aggregate amount exceeding 1 crore in one or more of the current accounts. Please be clear, the word is current account, not saving account. Correct? Second, has incurred expenditure aggregating 2 lakhs for himself or any other person on foreign travel, not domestic travel. And third, has incurred expenditure of amount of more than 1 lakh towards consumption of electricity or any other prescribed conditions. Now, out of these three, in the present case, the third one is triggered. Your electricity bill has exceeded 1 lakh. And that is why you are compulsorily required to file the return. Again, students, you'll have to write 139.1 and then you'll have to write this exception to 139.1 to give the complete answer. I hope this is clear to everyone. Everybody has understood this. Yes, students? Hello. Excellent. See, I've always been saying that the best way of revision is take sums and with sums go to the provisions. You understand the provisions more, plus you are able to remember them better as compared to if you are simply reading the provision again and again. Correct? And especially for chapters like deductions, TDS, where there are multiple entries, this is the best technique. Fine. Chalo. Briefly discuss the provisions of TDS. Again, same question. Now, Mr. Vivek received a sum of rupees 10 lakhs 20,000 on this date as a premature withdrawal of what? Of its employee provident fund. That too before 5 years of service. Why? Because he fell ill and because of that he had to leave the job, and in such cases he had to withdraw. Correct? Now the question is whether TDS is applicable. First question, which section? Aditya is asking, sir, what are the sentence should be right at a situation of questions? Sorry, Aditya, I did not get your question. Aditya, what do you mean? Very good, students. So, Dhanlakshmi, Vishakha, Gayatri, Garva, all have given the correct section numbers. It is 192A. So, we have to test 192A first. So, let us first see what 192A says. Are we satisfying the conditions? Okay. So what is 192A covering? The nature of payment is premature withdrawal of employee provident fund, which is our case. Payment is exceeding 50,000. It is also our case. Now, who should be the payer? It should be the trustee of the provident fund. Who should be the receiver? It should be the individual employee. And 10%. Now, as per the basic provision, it appears to be applicable, right? But again, as rightly pointed out by Garva, there is an exception. Now, what is the exception, students? See, in TDS, you'll find that majority of the questions are targeting the exceptions more. So you should be very thorough with the exception part. Okay, Gayatri is also help me with the page number. Gayatri, you said 47. I'm not having 47 page. I'm having 7.7. 7.47. Okay, okay, sorry. So as correctly pointed out by many students, so there is an exception when, even though all the conditions given in the bare provisions are satisfied, still TDS will not apply. Why? Because there are exceptions. Now, what are these exceptions? Yeah. Now, see here, you will get the detailed provision. So, exceptions from TDS. Withdrawal after continuous service of 5 years. So had you withdrawn it after 5 years, no TDS. But our case is before 5 years. But still there is exception. In case of withdrawal before 5 years also, there is exception. What is the exception? Employee opts for transfer of accumulated balance to new employer. So you are not taking it away. You are giving it to new employer. And second, termination is due to ill health, contraction or discontinuance of the business of the employer. So either it is your ill health or because the employer itself has discontinued the business. So this is something which is beyond your control. Now, the point, straightforward. But again, as I said, try to understand logic and try to connect it with something which you may have studied. Have you studied something similar somewhere, students? Try to recall. Is same point anywhere else covered? Correct, Gayatri. So, yes, Simran, correct. Salary head. And in salary head, over there also, we had the point on taxability of withdrawal of provident fund. And over there, same condition was given that where it is withdrawn after 5 years, in all cases, no taxability. And in case it is withdrawn within 5 years, it will not be taxable. One, if the employee has transferred the RPF balance to another employer maintaining provident fund. So in other words, technically you have not withdrawn and kept it yourself. We have asked this present employer to transfer it to the new employer. Or second, where it was beyond your control. Like why you discontinued before 5 years? Because you fell ill. Why? Because your employer itself has closed down the business. Now, in these cases, if you recall salary chapter, over there also the withdrawal is not taxable. Now, where the amount is not taxable, remember this golden rule also. Like one golden rule I said, whenever you are making payment to government, you'll never deduct TDS. That is a golden rule. That is a supreme rule. Similarly, one more golden rule you should remember, whenever you are making payment of any such amount which is exempt under the law, logically also, why should you deduct TDS when the amount is exempt? Same logic applies here, right, students? So there will be no TDS applicable here. Try to connect this with salary chapter. You'll get to understand the logic easily. So automatically say what is happening. We are also revising something of some other chapter. So maybe it may have faded, but because of this, you go back to that other chapter, you read it, you connect it. So logically also it is making sense. And now because you are connecting multiple chapters, understanding becomes more easier and better. Correct? So now again, first, how you'll write, you'll first mention that TDS on withdrawal, sorry, I've written it at wrong place. TDS on withdrawal, premature withdrawal from Provident Fund is covered under this section. This is the limit 50,000, etc. So you'll first mention the basic provision. But then you write, however, in case the withdrawal is after 5 years, no TDS. In case the withdrawal is within 5 years, but in this situation, you may not write the whole section. You may not write the whole exception because this will hardly carry 2 to 3 marks. But you write that where the withdrawal is within 5 years, but in the situation of ill health of the employee, it is excluded from TDS. And then your final answer will come. Hence, no TDS under 192A will apply. Clear, students? Aditya, I hope you also got the answer. I think this is what you are asking me. Correct? Should we proceed? Yes, Garv, you're right. Now, next. Indian Bank sanction and disburse loan of 12 crores to B paid a sum of 120 as service fee to the bank for processing the loan. Now, students, again, one more golden rule. First rule, payment to government, no TDS to be deducted. Second, wherever the amount paid is not income or it is exempt income, no TDS applicable. Similarly, third rule, that whenever you are making payment to banking company, you will not deduct TDS. So here, even though this section, this payment may get covered in section 194A, which is for interests and other charges. But because of the exception, what is the exception? Payment, no TDS. Correct, students? Oh, sorry. Yes. Gayatri, 194N is not the section here. 194N is for withdrawal from banks. Right here, you are making payment of a fee to the bank. So 194N will not apply. Fine, beta? Good. Let us proceed. Now 19.1. I'm sure now you can answer yourself. Chalo. because we have discussed a similar point. So you tell me. Aditya, what is 194M? How is 194M applicable? Chalo students, tell me the answer for this question. 1. We did this today, and this is a simple one. Nothing technical. Correct, Simran. So section number. Very good, Garva. Yes. So Harshal, so you give me answer. You only give me sentences. You never give answer. You have to give me answer. Very good, Dhanlakshmi. Yes, Gayatri. Correct. Correct, Simran. So students, this was our very first question. So Mr. Deepak wishes to purchase a residential house, amount 60 lakhs from Priya. House is in Chennai, stamp duty is 65 lakhs. So we saw the section IA, purchase of immobile property other than agriculture land. So this is not agriculture land, first part, right? Now, since it is other than agriculture land, TDS under 194 IA applies. The value will be higher of the two. So it will be 65 lakhs. Again, whether 50 lakhs has to be deducted, answer is no. You have to consider the whole amount into 1%. So it is 65,000. Correct. Second part is also wants to purchase agriculture land in rural area. The question is, in this particular case, there is a specific exclusion. So there is no TDS. Why? Because 194 IA specifically has excluded purchase of agricultural land. Correct? Clear to all? Let us proceed. Now, ABC and Co, a partnership firm, is having a car dealer showroom. Okay. It purchased car for 2 crores from the manufacturer. Cost of each car is more than 12 lakhs. And it is also selling the cars to buyers, yielding 10% margin on cost. So definitely that will also be more than that, because if the car cost is 12 lakhs plus, so 12 lakhs plus 10%, it will be more than the limit, threshold limit. I'm not mentioning the limit. Let's see what you recall. So turnover of ABC and Co and XYZ is less than 10 crores. Okay. So students, applicability of TDS, TCS. TDS, TCS, section number. Very good, Garba. Yes, correct. Correct, Gayatri. So whether it is applicable. Yes, correct, Garba. Very good. Harshal, which one? On what transaction and which one? So there are two transactions given, Harshal. One is manufacturer has sold cars to dealer. Dealer has sold cars to the buyers. So there are two transactions where TDS TCS applies. Which section? Hmm. Okay, good. So again, Harshal, what taxable, not taxable? Dhanlakshmi, you're quoting right section, but then is it applicable? Okay, Dhanlakshmi, correct. Gayatri, you're right, but again, there are two transactions, Gayatri. Okay, so people are having answers, but there are mixed answers. So let me first go to TDS. Now, the only TDS that applies here or can apply here, which is rightly pointed out by many, is 194Q, which is on purchase of goods. Now, see, students, there are purchases first made by dealer from manufacturer and second by buyer from dealer. Now, when will TDS under 194Q apply? When the value exceeds 50 lakhs. Now, when buyer is purchasing from dealer, it is not exceeding 50 lakh because one buyer is buying a single car. Even if you take the value as 12 lakhs, 15 lakhs, adding profit of 10%, still it will not exceed 50 lakhs. So here 194Q will not apply. Coming to between manufacturer and dealer, the dealer has purchased car worth rupees 2 crores. So it has crossed the 50 lakhs barrier. But the dealer, who is the buyer, will be responsible for this TDS if the total turnover of the buyer from his business in the preceding financial year exceeds 10 crores. Now, there is something given over here. What is that something? That the turnover of both ABC and XY, that is the manufacturer as well as the dealer, is less than 10 crores. So, how will write first? That since the turnover of ABC and XYZ is both is less than 10 crore, hence TDS not applicable. Firstly, clear? No doubts in this. That cannot apply, right? So TDS is now out of our discussion. Now let us check TCS. Now in TCS, interestingly, there are two sections. Advanced tax. Yes. First is sale of certain goods. Is motor car falling in this? No. So this is out of question. Then comes lease or license of parking lot. There is no lease or license in this. What is applicable to us is firstly this section 206C1F, as rightly pointed out by many. Now, what it provides, that every person being a seller who receives any amount as consideration for sale of motor vehicle exceeding 10 lakhs. Now, interestingly, this is happening in both transactions. Dealer is purchasing car from the manufacturer worth rupees 2 crore and each car is exceeding 10 lakhs. So 10 lakhs criteria is satisfied by dealer purchase from manufacturer. Similarly, when the individual buyer is purchasing the car from dealer, even in that transaction, this 10 lakhs criteria is satisfied. So the threshold is getting crossed in both the transaction. Further, what it says, the scope of this section has been expanded to include every person being a seller who receives any amount as consideration for sale of any other notified goods exceeding 10 lakhs, etc. So this is right now not required by us. What are the notified goods? These are the notified goods. Please make a note of this. You may definitely get this as one of your questions, maybe in your exams, because this is an important list. It has been notified with effect for from 20 to 4. So what is this? Wristwatch, antiques, paintings, then collectibles like coin and stamps, yacht, rowing boat. So these are all prestige items, if I can say. Pair of sunglasses, bags, handbags, purses, pair of shoes, sportswear, equipment such as gold kept, home theater system, horse for horse racing, right? Now, now in all this, primarily we are satisfying the condition. However, as we know, there are exceptions. Now for 1F, what is the exception? A person who obtains any sale, who obtains in any sale goods of the nature specified therein, but does not includes. So firstly, who is excluded? Excluded person is government, local authority, public sector company. In our case, none of them is there. But again, from seller, who is excluded? Now again, this covers 206C1 and 1F, central government, state government, local authority, corporation, company, firm, etc. Seller includes an individual or HF whose turnover, gross receipts from turnover of business, etc. exceeds 1 crore, etc. This is also the case that we are satisfying. However, still there is one exclusion. What is the exclusion? It is here. What it says, whether TCS at the rate of 1% on sale of motor vehicle at retail level or also at sale of motor vehicle by manufacturer to distributor will apply. So here is our exception. What it says, to bring high value transaction under tax net, 206C has been amended to provide that seller shall collect tax at 1% from purchaser on sale of motor vehicle exceeding 10 lakhs. This is brought to cover all transactions of retail sales. Accordingly, it will not apply on sale of motor vehicle by manufacturer to dealer. So effectively, this transaction has been excluded. So no TCS under 206C1F. But this is covered. So TCS applicable at the rate of 1% on sale value of motor car. Students, I hope this is clear. Oh, thank you, Jaya. So Jaya has just shared that she has secured 91 in cost. So it's excellent marks, Jaya. 91 is commendable because normally students score very less in costing FM and tax. And I'm happy that I'm part of costing and tax. So thank you, Jaya. And yes, congratulations and a very big applaud for securing 91 marks. Yes, students. So I hope you understood both aspects. So this has been specifically excluded. This will be covered. Is this fine? Clear to all? Understood? Fine, students? Now there is a theory question. So we'll go on a break. Maybe during the break, you can take up or go through the theory answer of this. And after the break, I'll come back to deal with some more practical questions. So let us have a break. individual HF, they will have to file the return only where they have an income which is taxable. Now here the question is, when you have to file a return despite of having loss in your return. So for this, then Lakshmi has given a list of when return has to be filed. So see students, the basic idea is return will have to be filed because without filing the returns, you will not be allowed to carry forward the loss. So for the purpose of carrying forward the loss, you will be required to file the returns. Now this is as per section 80. Losses can be carried forward only when the return for the loss is filed, and it is filed within the time limit of the returns which is under 139(1). Now importantly, what are the losses for the carry forward of which return has to be filed in time? One is loss under the head capital gain. The other is loss from the activity of maintaining race horses. Then your business losses, regular business losses, speculation business loss, and loss from 35 AD business. Now, importantly, what is very important, which you should note, which may come as a practical question, not as a theory question like this, is that for two types of losses, even if return is not filed in due date, that is within time, you can still carry forward the loss. That you should keep in mind. That is loss under the head HP. This will be obviously if you opt out of the default regime, because anyways HP loss can be set off only in case of opting out. So that loss can be carried forward even if the return is filed late. And second is unabsorbed depreciation, capital expenditure on scientific research, and family planning loss. So these losses, which are part of PGBP head, but they are not carried forward under section 72, they are carried forward under the respective section of depreciation, capital scientific research, family planning. So yes, correctly pointed out by Garva and Simran that for these losses, a return filing has to be done in order to be eligible for getting the carry forward and set off. Correct? Okay. The remaining are straightforward theory questions. I'm sure you can deal with them. Let me now take some more practical questions. So now we come back to question 1. Yes, students. Now, tell me which section we have to apply here. That is the first important point that you have to check. So, what is the situation? ABC having its registered office Noida, organize annual function in Gurgaon. For this purpose, the company engaged Beta Limited to arrange road transport of its employees from Noida to Gurgaon and back, for which a payment of 25,000 has to be made. Further, ABC also entered into a separate contract with Beta for providing catering service, which is rupees 90,000. So, which section, students? Very good, Garva. Very good, Aditya, Gayatri. Yes. So tell me the applicability. Okay. Gayatri, what you wrote, I have not understood. I think there is some typo. Now, you all are correct. So the applicable section is 194C because these are contracts. Now, you have entered into two separate contracts. Now, when you read 194C, firstly, whether payer company is covered, answer is yes. Company, firm, all are covered. Only individual HFs are not covered. They will be covered if their turnover of last year is exceeding 1 crore or 50 lakhs. That we have already seen in detail when we were discussing the previous answer. So here, basic applicability is there. Now, main question is about threshold. The threshold over there is two threshold. This is per contract and 1 lakh in aggregate if multiple contracts are given. Now, if I apply this 30,000 limit, this will be outside TDS. However, since both these contracts are given to Beta Limited only, and the aggregate of these two will come to how much? 1,50,000. So even though this 30,000 is not satisfied here, but it gets satisfied here. So the TDS will be applicable under 194C. And yes, Aditya, why only road construction? It is for any contract, beta. Any contract, not only road construction. Correct. Very good, Garva. So it will be at the rate of 2% because the recipient is a company. Hence, since the pay is a company, the rate of TDS is 2%. Otherwise, if the pay would have been individual HF, the rate would have been 1%. So amount is given to me by Garva, and also I think Garva has given me the amount as 2,300, which is 2% of this amount. Right, students? Clear? Understood? Okay, let us proceed. Next, Vijay Health Solutions, or TPA, makes payment to various hospitals across India towards settling cashless medical claims on behalf of insurance companies. Perfect. During the financial year, the total payment made by Vijay Health Solutions to the Life Care Hospital is 12 lakhs. Students with section D. Why D, Vishakha? What is covered in D, Vishakha? Oh, insurance commission, correct. But Vishakha and even Garva, this is not insurance commission, rather it is insurance repayment. Aditya, ATC is where the people are paying the Mediclaim insurance, they will get deduction under ATC. See here, please understand firstly, what is a transaction? Let us say you had taken a Mediclaim policy. Unfortunately, there was some medical emergency. So somebody from your family was admitted and you got treated. Since you had the Mediclaim policy, you did not pay anything to the hospital, you were discharged. Now what hospital does? Hospital will lodge a claim with the insurance company and the insurance company will pay to the hospital, right? However, practically what happens? See, there are multiple hospitals, plus there are multiple insurance companies. Now it is very difficult for each hospital, and each hospital will have hundreds of patients having Mediclaim. So it is very difficult for each hospital having hundreds of patients to go to different insurance companies for different claims. So what they do, there is a middleman who is called as TPA, third party administrator. So what the hospital does, it gives all the claim files to the TPA. TPA will go to the respective insurance company, get the claim cleared and get the claim and give it to the hospital. So this is how it happens. So here what has happened, this Vijay Health is not a hospital, it is a TPA. So as I showed in the diagram, someone in between the hospital and the insurance company. What it is doing, it is going to make payment to various hospitals. For what? For their claim settlement on behalf of insurance company. So these people, the hospitals do not have to go to the insurance company. The TPA does this for them. So TPA is a specialized, you can say, agency who is connecting the hospital with the insurance company. Now, during this financial year, the total payment made by this TPA to one of the hospitals is 12 lakhs. Right? Now here, students, what is to be tested is 194J, because 194J is towards professional fees, and we all know medical comes into profession, so the payment of your treatment is also part of medical, correct? Now the question is, whenever these mediclaims are settled by the insurance companies through the TPA, the question is whether it will come under TDS applicability of 194J or not, correct? So let me take you to the section. Now see, in brief, you all know 194J, but here, because of this specific case of TPA, we'll have to go to the detailings of 194J. I'm not able to see J here. Let me take you to the main part of 194J. Oh, great. Gayatri has given me the specific page number 7.39. Yes. Now see, what is this point? So we are in this particular section 194J. Now what does 194J says? That whenever you are making payment of one of these and there is a limit of 50,000, if the payment exceeds 50,000, you have to deduct TDS, right? Now in this, there is non-applicability. So an individual HUF is not liable to deduct TDS at source. Hence, an individual or HUF whose total sales, etc., turnover, etc., exceeds 1 crore will only be required to deduct TDS. Other individuals will not be required. This we know. What is important is this part. Since this provision requires individual HUF to deduct tax at source only in respect of fees for professional service or a technical service, it can be inferred that individual HUFs are not required to deduct TDS on royalty. Okay, that is fine. Now this is the main point. What is the point? An individual HUF shall not be liable to deduct income tax on sum payable by way of fees of professional service in case such sum is created or paid exclusively for personal use. Now, had this payment been made by individual to the hospital, this particular relaxation would have come and there was no requirement of TDS. But that is not the case. Here the payment is not made by individual to the hospital. Rather, here the payment is made by the insurance company to the hospital, that also through TPS. Now what is the point? There is a specific circular relating to it. What it says, TPS are liable to deduct tax under 194J on payment to hospitals on behalf of insurance company. So this circular dated 24/11/2009 clarifies that TPA who are making payment on behalf of insurance companies to hospitals for settlement of medical insurance claim under various schemes, including cashless schemes, are liable to deduct tax at source under 194J on all such payments to hospital. This is because the service rendered by the hospitals to various patients are primarily medical service and therefore provisions of 194J are applicable to the payment. So this is that specific point, students, because of which this payment, which is made by this TPA to the hospitals, is liable for TDS deduction. Is this clear? What is the amount? Rupees 12 lakhs into 10%. So TDS is 1,20,000. So whenever TPAs are paying to the hospitals, even though it is for medical treatment, but it will be leviable to TDS. Correct? Understood, students? We proceed. Okay. The next, Mr. Subhas is salaried individual, pays a rent of 52,000. Now here that special provision of which section students will come? We just discussed this. I was explaining you the difference between regular and special provisions, and I had given you the glimpse of the special provision. See, rent is 194I, I agree. But here you are not covered in 194I. Why? For being covered in 194I, the person should not be individual HF. And if the person is individual HF, the person should be engaged in business having turnover of more than 1 crore or profession having gross receipts of more than 50 lakhs. That is not the case. The person is not engaged in business. The person is a salaried individual. So 194I is gone. Which is the other section instead of 194I? We discussed this at the start. Then I revise it in between when I explain you the difference between the regular and special section. See, now what is applicable to our students is 194 IBY because the payer is an individual and not having business turnover exceeding 1 crore. In fact, the payer is not having business at all. And I already explained that for HNIs who are high net worth individuals, either drawing salary income, property income, other sources income, and who are making a huge expenditure are covered. Now for 194 IB, the rent will be covered or liable for TDS first if the payment exceeds 20,000 per month or part of the month. More important point. This part is very important. When is this TDS required to be deducted? At the time of credit of the rent for the last month of the previous year or the last month of tenancy if it is vacated during the year. So this was highlighted by Garva earlier also that whenever this TDS is to be deducted, it will not be deducted month on month. It will be only deducted in the last month of the previous year. Or if you are vacating the house before the end of the previous year, then in the last month in which you are vacating the house. Now here we have to test the applicability of TDS. So first requirement is payer should be individual, not having business turnover above 1 crore. That condition is satisfied. Payment of rent per month should exceed 50,000. That condition is also satisfied. So how much will be the TDS? The TDS will be at the rate of 2%, correct? Yes, now comes the main point. For what period? Now here that we will check. So what is given? Mr. Subhash is paying rent to Mr. Raj. Mr. Subhash vacated this on 31st August. Now for our financial year, we have to only cover our financial year. So it is April, May, June, July, August. So we take 5 months. 25, 260, 2%. Correct, students? Correct, na? Then next, second part. What if he vacates the premises on 31st October? The number of months are increasing. So 2 more months are increasing. So in this case, it will be 52,000 into 7 months. So how much it will become? Correct? 364 into 2%. Perfect. Perfect, everyone. Good. Great. Clear, students? Second part. ABC Traders, a partnership firm, is engaged in the wholesale business of Tendu leaves. Now we have seen for Tendu leaves, the section is 206C, bracket 1. Its turnover in the last previous year is 9 crore. During the current year, it has sold Tendu leaves worth rupees 12 lakhs to XYZ Limited. XYZ Limited does not provide its PAN to ABC. Now here TCS applies. What will be the answer, students? Correct. Very good, Garva. What about others? Hmm. Now see, what is the rate of TCS? 5% general rule. But the problem is PAN is not given. Now, what is the rule in case of TCS if PAN is not given? So instead of 5, how much you'll pay? You'll pay double, not 20 better. That is for TDS. In TCS, it is double. Correct? So here, instead of 5, it will become 10% wherever PAN is not given. Right, students? Understood? Clear to all? Yes. So it will be 10%. How much is the amount? 12 lakhs. Sure. Next. Nexus is a company engaged in the business of manufacturing electronic goods, turnover of 20 crores in the last year. Current year, the company made following purchases from a resident seller. From vendor A, it has purchased raw material worth rupees 60 lakhs, 25 lakhs in April, 35 lakhs in July. Payment of 20 lakhs was made in June and remaining in September. A has not furnished PAN. For B, it has purchased trading goods worth rupees 48 lakhs on installment, 15 lakhs, 20 lakhs, 13 lakhs, entire payment made in March 26. It is to be noted that Nexus Limited has made this entry in the books on the date of purchase and TCS provisions are not applicable on vendor. Because see, for purchase of goods, you have also 206C1H, which is for TCS. But for that, vendors, last year's turnover should exceed 10 crore. It may not have exceeded 10 crore. So they have said that TCS is not applicable. It means we have to analyze this only from the perspective of TDS. Yes. So what will be now the implication? Firstly, is TDS applicable? Which section? So for the students, which is the section of TDS applicability? Yes, now you should know this. We have done this in multiple cases. Very good. Correct. Garva, Harshal, you all are right. So it is 194Q. Now for 194Q, the buyer's previous year turnover should exceed 10 crore, and it is given that the buyer's turnover is about 10 crore in the previous year. So Nexus Limited is liable to TDS. But now there are two vendors, two suppliers. For first supplier, the amount is 60 lakhs. For the second supplier, the amount is 48 lakhs. So what should be done? We did this. That is why now I'm asking you. Yes, very good, Simran. So 194Q applies whenever the amount exceeds 50 lakhs, first thing. And second, it applies only on the exceeding part. This also we discussed. So interestingly, here no TDS because it is not exceeding 50 lakhs. Here there is TDS, but the TDS will not be on 60 lakhs, it will be on 10 lakhs. But now the question is when? When will this TDS be applicable? So you made 25 lakhs purchases in April and balance 35 in July. So whenever you exceed 50 lakhs in that month, the TDS will be applicable and the TDS will be applicable on the excess portion. Correct? So this will apply in which month? It will apply in July on rupees 10 lakhs, which is exceeding the threshold of 50 lakhs. Perfect. You all are correct. Excellent. Now comes the rate. Now your normal rate is 0.1%, but you have not provided PAN. If you don't provide PAN, what is the TDS rate? Okay. No, Dhanlakshmi. Now it is not 20%. Yes, for other TDS it is 20%, but for 194Q it is not 20%. What is the rate if PAN is not provided in case of 194Q? No, beta Harshal, twice of the applicable rate. This rule is in TCS. See, so 20% in other cases, and for 194Q, it is 5%. So whenever PAN is not provided, TDS will be deducted at a punitive rate, which is higher rate, and which in case of 194Q is 5%. Is this clear to all? Understood by all? Clear to all? Next. Sumit engaged in business having turnover of 1.2 crores. During the previous year 24-25 enters into annual maintenance contract with ABC, a resident company, for rupees 5,40,000 plus GST. Sumit made the payment in February 26 and ABC has not provided its PAN. Which section, students? Garva, 194C or the special provision 194M? Because yes, it is contract, but the payer is individual. So what should happen? Payer is individual. So 194C, H will not come, beta. H is for a different purpose. Very good, Garva. Yes, students. 194C is for contract, but then also there is 194M. Very good, Gayatri. So it will be 194C only. Why? Because even though the payer is individual, engage in business and the turnover of last year crosses 1 crore. The moment you cross 1 crore, you fall in the regular provisions, not in these special provisions. So you are falling in 194C. You are making payment to a company. So the rate should be 2%. But again, the problem is company has not given PAN. Now what? What rate? And also there is one more question on what value. Why? Because here it is 540 plus 18%. So you have not paid only 540. You have also paid 18% extra. So whether I should, yes, that is the point, whether it is including GST or excluding GST. So yes, correctly pointed out by many. GST will not come on this. It will be only on 5.4 lakhs at the higher rate of 20%. Correct? So how much it is? 1.08? Yes, I suppose so. 1.08. Yes. Perfect. Students clear? Everybody understood TDS provisions? Yes. Great. In case one, if payment was 20 lakhs and 9 lakhs. See, beta, in that case, 1 lakh in July and 9 lakhs in August. Pushy. Because only after you cross 50 lakhs, you'll start deducting. Now in July, you have crossed 50 lakhs, but the amount is only 1 lakh excess in your example. So 1 lakh in July on that TDS and in August on 9 lakhs. Perfect. Pushy. Understood? Great. So students, I'm sure TDS, TCS, advanced tax, all these are now crystal clear to you all. Yes, yes, I'll upload this, Gayatri. Yes. So thank you, students. Thank you very much. And please, please do study. It is very important that you are in touch with your syllabus regularly, especially for topics like these. You have to be more regular. Please, the only success mantra is keep on revising and start solving sums like this. Maybe you refer to the provisions, no problem. Initially, that is allowed. Perfect. Excellent. Thank you, students. Thank you very much. Take care. And please, please be in touch with your studies. I want everyone in flying colors. Thank you all. Good day. Ashok ji, good night. Yes, Ashok ji. Thank you. Good night. Thank you.